If we could get the meeting started, I'd like to introduce our next speaker. This is Robert Clark from Petersen International in Valencia, California. Petersen International is a cover holder for Lloyd's of London. Robert has been with Petersen International for a number of years, and he's one of their regional vice presidents and is very passionate about the products that he represents. He has had family experience with insurance benefits and is really good at what he does. So please listen to what he has to say, and I welcome you, Robert Clark.
Thank you so much, Sherry. You know, I really do want to thank Sherry Weber with DI Broker West for inviting me to be here today. Not only that, but her support of NAIFA. You know, I was honored, and then I started thinking about, man, how many people must Sherry have called to do this presentation for her to end up with a millennial carrier rep? How about that? At what point was she going through her phone and, you know, saying like, oh boy.
You're my first pick.
All right, let's go for it. And I'm like, yeah, let's do this. I got it. For those of you who don't know, I'm based in Los Angeles, California. There, I am a longtime NAIFA member. I am the programs chair for our NAIFA Los Angeles local, so I have so much respect for how much work goes into an event like this. To get 200 people in a room, it's just absolutely phenomenal. Sponsors outside. And so I want to, real quick, give yourselves a round of applause for being here, sacrificing a day of work. You know, you've literally likely gone through the snow, uphill both ways. And I'm happy coming from California, I could bring some sunshine. You're welcome. Just a quick housekeeping. My humor is very dry. My sarcasm you will probably not notice until the end of the hour, so it's going to make for some fairly awkward moments. Just like that one right there. Anyways, we'll work on it. We'll get there. I've been studying a lot of the patterns of top speakers in our industry today, legends in the insurance industry, and I've always noticed one common thread. They're always referencing and building their credibility with key technological advancements that have happened over their career. You know, quick to reference things like the fax machine and the cell phone that they finally got. That was the size of a briefcase they had to carry on their back, also through the snow, uphill, both ways. Or how about these futuristic personal computers, or as us millennials like to refer to as PCs? You know, there's been a lot of things that have happened in the course of many of our careers, and I'm kind of fortunate to say that even as a millennial in this industry, I've had a few technological advancements happen as well during my time. For instance, our good friend Mr. iPhone did not even exist back when I was graduating high school and getting ready to go into insurance. It was actually released 30 days later, so that's one thing. And you can see I have a message from my girlfriend saying, "You're going to do terrible. Probably stop." Another cool, interesting fact was every Uber when I started was a yellow Ford Crown Victoria. Usually they marked themselves with huge signs on top. You couldn't order them on your phone, so that's how you knew what ride to get in. Around that time as well, Saturn wasn't just a planet, but also a car manufacturer. I mean, I'm taking you way back, way back. But one interesting thing that I want to make light of is the fact that when I started in insurance, a little company that we all know called GoFundMe didn't even exist yet. And today that company has raised over $5 billion for clients and consumers in need, no matter what they're doing. And so as I think about an idea like that, it really forces me to think about income and asset protection and positioning, and what different things are today's consumer dealing with, or what resources do they have available that affects how we're sending messages to them and how we're helping them navigate this new form of life with all of these resources. So in order to think different, it's imperative that we all agree on a baseline. Today, I'm going to try and make this as non-statistical as possible, and our baseline is named Bob. So a lot of our messaging and the concepts I'm going to talk about today have to do with how we're talking to a prospect or client like Bob. Bob might be a somewhat average client for most, 40 years old, married, 2 kids. He's a sales executive at a company, not an owner, but an employee, and he's decent. He's pretty good. He earns $250,000 a year doing that. Your average $800,000 home, and fortunately, for income and asset protection, the one benefit his employer offers him in that realm is a $5,000 a month group long-term disability policy. And so I know many of us in this room are already seeing a gap, but I want to talk about the messaging and the repositioning of how we're having this conversation with clients like Bob. You know, through my start of field work as a carrier rep, I started going to various agents' offices and helping them understand how we can provide value to them through various products and services. And in training for this job, I spent hours, days, weeks, and months getting pushed material like this. We have products, our products have contracts, our contracts offer certain benefit amounts and certain benefit periods. And I was really struggling, actually at first I was super excited. I was like, oh my gosh, every agent probably wants to know this, am I right? And so this is part of my conversation here today about thinking different and how we change this message. Now, unfortunately for you, this is a CE credit, so we do have to go through this slide. So everyone, hang on. Get your pens out. If we're looking at the income protection industry today, here's a lot of the norms that you're going to hear about. Things like non-cancelable contracts to age 65 for our clients, meaning that as soon as they buy that contract, an insurance company cannot cancel it, and the insurance company cannot raise the rates for that individual until they turn 65. Products like that are going to require full underwriting, financial, medical, and often we can get benefit amounts up to $20,000 a month. There's some very thought-leading carriers that have done something called simplified issue. We're going to bring down the benefit limit, but make it easier to obtain for our clients by, instead of a full paramed exam, we're just going to do a telephone interview. And that works for the mass consumer. Then we have this next generation of insurance carriers offering things even like a return of premium rider, meaning that if you buy this policy and you never use it, we will refund your premium at the time that you retire. Now, I can already see in this room how many of you are like, man, this guy was off to a really good start. I laughed at a couple of his jokes. But if the rest of the presentation is like this, I think I have to go to the bathroom. And frankly, I'm just being honest. And it took me about a year into my first insurance job working with this company to be like, man, if you do this enough time to agents and advisors, they stop taking your calls. How many of you have been in your own conference room with a carrier rep and you started going through details like this and you're like, oh my gosh, get me my hour back, right? And you're not wrong. Frankly, it's the exact same, if not worse, for clients. Clients do not care about what the carriers can do or what the brochure looks like. They care about how we're helping them. And so it was through this field work, fortunately, I get to work with a lot of the top agents and advisors nationally. My business in the Lloyd's of London space specifically deals with high net worth and high income clients. And so getting to work with the agents of these individuals puts me in some really unique situations that I've been very fortunate to be a part of. And it was in one of these meetings where I discovered a very unique sales message. A producer that was finally taking these products and benefit limits and putting them into a story that resonates with clients. That is something called Job A and Job B. Now, many of you have likely seen Job A versus Job B. If you haven't, here's your first golden nugget, and it's not even really a good one, so sit down and strap in because this is about to get a lot better. Thank you for laughing. Job A versus Job B says to our client prospect, Bob, it says, Bob, you have two choices. Either you can work for Job A, which pays you $250,000 a year while you're working, and $60,000 a year if you become disabled and can't work. Mind you, that $60,000 benefit may or may not be taxable, further reducing it. Or, Bob, you can work for Job B. Job B pays you $245,000 a year, a very similar salary, but it pays you $150,000 a year if you become disabled and can't work. Now, any competent person should say what? Job B. But do they always say Job B? They don't. And so this, again, was a very similar wall that I started running into. We've taken what the carrier is offering, we've put this into a compelling story for a client to more reasonably understand, but still, it's falling on deaf ears. This doesn't make 100% sense for many clients. It does for us. So then I started to think about, okay, what is today's consumer dealing with? What is their world? What's changing in our world that is affecting how they look at a situation like this? And so instead of looking at insurance carrier trends or life insurance policy trends, we have to think about, what is Bob going through? What are the messages he's hearing? First and foremost, we know incomes are on the rise. We're among some of the top employee talent and competitiveness we've ever been in. With lowest unemployment rate, companies are fighting for this top talent. They're throwing money at it. They're throwing top benefits at it just to get the right people. So we know incomes are going up. And insurance carriers are addressing this. $20,000 a month of benefits, that covers you at $400,000 of income. That'll satisfy most consumers. But the other interesting thing is we have things like the internet and Amazon. And Amazon's a big company, yes, and they've grown, but what does Amazon do for today's consumer? I can get things faster than ever before, and I almost am certain that I'm paying the lowest price possible for that solution. Not only these two, but we have unique income sources, gig workers, 1099, freelancers. Not everyone's W-2. Even those that are W-2, many of them are earning stock awards, stock options, restricted stock units. We have thousands of startups where their founders are living off capital that was injected by a private equity firm in a Series B funding. They get their funding and they're like, I make $300,000 a year. Yeah, it's cool. And they're like, yeah, but you sold an idea and now you have funds. You can't live like that on that capital. And if you are, and if that's okay, how do we protect that as an income and an asset? These next few, I know you're all aware of. We're in a very low interest rate environment, especially when I talk to people that were former bankers in 1985 and 90, and they're saying, you know, I want to lock you into a 12% CD. I've never even seen anything like, I haven't seen a 12% 401k in a while. So that's always very shocking. You have stock market volatility, right? That's bouncing around more than we'd all like. And then for clients like Bob, we have higher education costs. I mean, these costs are going to be astronomical by the time a kid today turns age 18. I'm really praying, really holding out, that community college is the next cool thing by the time my kids are 18. And I'm waiting to have kids just so I can kind of start matching this timing a little bit better. Yeah, there's if you don't get anything out of my presentation today, that's your tip for you young professionals. And this last one, financial wellness. You know, we have so many tools, many of them on our phone, and we have so many unique things available in the financial services world. But one of the things we're dealing with is the most financially uneducated consumer that we've dealt with in history, right? As financial planners, as insurance agents, we want to help our clients understand the facts and the pros and the cons. But they call you about, hey, I want to go to Cabo, so can I pull out money? And I don't care where you grab it from, and I just want the money, right? And so we have such an uneducated economy. And what are we doing to help meet them where they are? So, with these market trends, in a job A versus job B scenario, where many of you agreed, not many clients say job B. Some do, absolutely, but not all of them. What have we essentially pressed our client like Bob to do? We've basically said, Bob, if you're willing to gamble $5,000 a year on the fact that you will become disabled, you may or may not become disabled during your working career, do you see that making sense? And the reason a lot of clients don't choose job B, it doesn't matter that 1 in 4 20-year-olds will be disabled for 90 or more days by the time they retire. All that matters when you're having this conversation with Bob is what he thinks his chances are of becoming disabled. And generally, what are those? It's not going to happen. I'll never become disabled. And so we have to think about those market trends. What is going on in our consumer's mind where this is not clicking for them? So that's exactly what I want to talk about today. So we're going to dig a little bit deeper into our client prospect, Bob, who I thought, I mean, he could absolutely be from Portland or Oregon. Do you agree? I mean, you should have seen the first guy marketing put up there, and I'm like, no. Presenting in Portland, not Hollywood, Jesus. So Bob earns a healthy income like we talked about. That nets in between $12,000 and $13,000 a month. He has about $10,000 a month in expenses, so a good savings delta there. He has a 401k he's contributing to. He has an investment account with his financial representative, and he has about $200,000 in home equity. Now, I want to challenge anyone here. What do you think is the most valuable asset on that balance sheet? Bob. Absolutely. That $250,000 income for the next 25 years supersedes any of those assets, despite him currently having $1 million of net worth at the young age of 40, which many would consider good. And so when I was thinking about income and asset positioning for this presentation today, I thought about how are we helping a client understand their grand vision, right? Tim, I love your 4 quadrants. I think that's brilliant. Because you try and have a client understand the bigger picture, right? What are we trying to do for you, Bob? The whole point is we want to work with you so that you can make the decisions today that over the course of the next 20 to 30 years are leading us to our desired end goal. Whether that's a golden egg, whether that's a business value, whether it's a combination of multiple things, rental properties, whatever the case is. We know we want to end here. And so when I was thinking of this presentation, I'm like, we're looking at a plan like this. Hopefully yours is a little bit more complicated, or complex, than four dots on a scatter graph. We're looking at a plan like this, and if Bob, and what are possible gaps in exposures? One, obviously, being if Bob suffers a disability, right? We talked about job A, job B. Bob doesn't think there's a chance he could become disabled, but let's just play it out. So what happens, Bob, if in the best case scenario, something happens relatively short term, average claim length for a disability today is 32.4 months. What happens if you go out on disability? We have $12,000 a month of income. We have $10,000 a month of expenses. But you're going to be receiving a $5,000 a month group long-term disability benefit. And so I know we can all see the